Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 339 today, 24th of January. We are getting close to the budget. And today's learning from this episode is about SIPs and gold as a hedge. You have heard me uh, say a lot of good things about gold, but I want to combine these two, uh, doing SIPs and as well as having gold in your portfolio, and show you some data on this. Our learning from doing all kinds of research on various strategies so far has been twofold. One is that strategy is not so important. So, we have almost a dozen momentum strategies with different niches, but there's not so much of a difference across those strategies. Uh, the main difference that happens in any portfolio is how you are bringing your capital in and how you're doing asset allocation on a larger basis, which of course your advisor should advise you on. But these two make the most impact in terms of what is going to be the outcome of your portfolio rather than that particular strategy that you may be running after. So, strategy is important, but it is not the end all for it. So, let's dive into today's market. But first, a reminder, all our subscribers at Weekend Investing should start using the loyalty discounts whenever their renewal is coming up. Any annual subscriber who has completed 1, 2, or 3+ years will get an increasing discount on their renewals, and the same discount can also be used to take on any new strategy to create a bouquet. A lot of you may also not know that the Weekend Investing website, weekendinvesting.com, now has a facility where you can allocate percentages to different strategies. So you may say that, I want to put 50% in all cap, I want to put 25% in NNF10, and I want to put 25% in MI25. What would have been the result? So you can do all those kinds of combinations there and figure out what is the best outcome for you. So that is something that I will also showcase in some other daily bite. Coming back to the market, we have been stuck in this range 17,800, 18,200. Market started strong in the morning, but was not able to, break out of this. I suspect it will take some more time, and the big event is coming up, and we'll talk about it in a while. Overall, there was correction in most sectors, PSU banks leading it down, although we had some fantastic results coming in through Canara Bank, UCO Bank, etc. Real estate, pharma, even metal stocks losing quite a bit. Commodities down 0.9%. Public sector enterprise also down 0.7%. There seems to be some fear about the budget, maybe, or maybe the market knows something about the budget that we don't know yet, and some of this profit taking is happening. Autos was the bright spot in the market, with Maruti coming out with spectacular numbers, and IT on the back of good Nasdaq moves previous night went up 0.8%. Overall, a quite a average last 1 week, with only gains in IT stocks and public sector enterprise, along with Bank Nifty to some extent. You can see here Nifty closed exactly flat. So total indecisiveness in terms of where Nifty is going to go. CNX 200 also down, CNX 500 also marginally down, Nifty next 50 down 0.25%, mid and small caps and small cap index also down 0.4%. So there does seem to be some selling that is coming through uh, ahead of the long, I wouldn't say long weekend, but I am suspecting that Friday is going to be an extremely poor volume day, given that most people would like that 4 day vacation. So tomorrow's expiry, the early expiry on Wednesday, may actually see some more profit booking, is my guess. MI25, NG5050 were the only two strategies in green. Rest all the strategies varied between 0 and 1.22%. So dismal day on that front. State Bank of India lost a percent. Axis Bank, despite good results, lost 2.4%. Kotak Bank lost 1.3%. SBI Life lost 1.7%. So there is a spate of selling. HDFC twins, however, have been gaining ground. TCS, Infosys, HCL Tech also doing all right. Maruti was the star performer along with Tata Motors and Bajaj Auto to some extent. Mahindra results are awaited, I think, and they should be good as well. Reliance down 0.6%. Power Grid was another loser here, minus 2% nearly. L&T taking off some of the profits, minus 1.616%. Pharma also, I think Dr. Reddy and a lot of mid-cap pharma stocks losing a lot of ground, and steel and cement also coming off. So maybe there is something about steel that may come around in the budget. I don't know, but it doesn't seem market doesn't seem very enthusiastic about the budget as such. So coming back to the topic of the day, SIP and gold. So as I was saying, two major learnings from all our studies and research: do SIPs and do asset allocation in gold. Uh, how much to do? Your financial advisor will tell you. My golden thumb rule is age divided by two as percentage of your net worth into gold, but you may or may not agree with that. Some periods of equity movement where, uh, for instance, this last 3.5 years, just before COVID, you saw market going up all the way, and then in COVID it gave back all the gains. uh, Gold bees, we are tracking the gold ETF here. Gold bees in the same period gave 74% return versus Nifty of 16.6%. Then from mid end 21 till June 22, you saw Nifty again going down by about 17%. And in that period, the gold ETF went up another 8%. And then from October 21 till date, index is flat. We've not gone anywhere. Gold ETF is up 20%. So while this may be only last 3 or 4 years of data that we are seeing, but I have tremendously shown you tremendous amount of data over 20, 30, 40 years, where gold, although it should not be looked at a competitor to Nifty, but it's a fantastic companion to Nifty. So all your exposure to equity markets as well as to INR denominated assets. It could be real estate, it could be debt, it could be anything else. We are sitting with INR assets, and if INR goes for a toss, God forbidding, if it happens in our lifetime, this is the only thing that will save you. And I've shown you umpteen examples of Turkey, of Pakistan recently, of Venezuela, of Russia in the past. Uh, Several countries have, benefited. People there have benefited. Their purchasing power has been protected. Their assets, their exposure into riskier assets has been hedged because of this. So, how we have played this theme is through two products. So, I'll show you what is the performance of these products. So, let's say we do a SIP in a product called NG5050. This is a free product. It's available on Smallcase. It basically invests in Nifty as well as gold ETFs. That's all it does. So it's a equal contribution to Nifty ETF and to gold ETF, and every month we rebalance it so that it's 50% weighted. As simple as that. And the simplest things work the best in this world. So if you did last 6 7 years bit of data here, 6 years and 3 quarters, if you invested 10,000 rupees every month, you would have put in 8,20,000. Nifty 50 index would have given you 12.95 lakhs uh, as a end value, portfolio end value. This portfolio would have given you 13.17. Very, very similar, almost identical. But the point to note here is the trajectory. How and the orange line is the NG5050 trajectory, and the blue line is the Nifty trajectory. And you can see that there is no drawdown here, virtually no drawdown, just a small blip at COVID, and it is just going straight up, 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 up. There is hardly any blips in this. So the volatility is extremely low in this because gold is acting as a hedge to the index, and the end result is almost similar. So if you get the same returns, similar returns, but lower volatility, which product will you choose? It is a no brainer, right? So please put some money into this free strategy, run it for a few years, see how it gives you confidence. I've been putting all my spare money into NG5050. because it is giving me a very good, better than the bank result. Still, I find better use of that money to deploy elsewhere. XIRR on this has been 13% last 6.5 years. I think I don't need any more to accumulate wealth on that. Mi Evergreen is the next level of strategy. So, NG 50/50 could be your first one. And then once you are able to, appreciate the concept of gold in it as well as the benefits of sipping, you could go to the next level and enter this strategy, Mi Evergreen. Mi Evergreen is a strategy which uses CNX 200 stocks. So it selects the top 20 high momentum stocks from CNX 200, and it will combine it with a hedge of gold. So 25% allocation in that strategy towards the gold ETF. Again, what would have happened here? Since April 16, you would have had contribution of 8,20,000. CNX 200 index would have given you a 12.89 lakhs of return of portfolio value at the end of this period. And look at this result from Mi Evergreen. It would have given you 18.08 lakhs in the same period. And just see how it took off after COVID. Till COVID, pre-COVID, it was pretty much in line, but post-COVID, the strategy has taken off and beaten the underlying CNX 200 hollow, because gold has taken off since COVID bottom. So the idea is that you should be able to combine the hedge of gold in good times as well as in bad times. In good times, gold may not beat Nifty, but in bad times, it will definitely do that. So overall, you will have a extremely good outcome when you will follow this strategy for a long period. Some 1 year, 2 years may happen where it may not outperform because Nifty may have that bulk performance in those years. But a very very smooth run. It never went into a negative capital. You can see that even though it came back to zero here, it never went into a negative capital, whereas the CNX 200 index went significantly below the capital line. So these are extremely powerful insights and studies that and very simple ones that really can make the difference between having an average outcome and having a very superior outcome, and how you compound over time. So two takeaways: gold provides a cushion during weak market situations, and SIPs ensure averaging, thus giving you the ultimate comfort. So in a self-correcting strategy like this, uh, if a stock is not doing well, in the next rebalance it will go out, some other new stock will come in, so you will never be stuck with a loser for too long. That is a benefit of a self-correcting strategy, and what all our strategies are in that way. So if you wish, you can head to Mi Evergreen, go to Smallcase, weekendinvesting.smallcase.com. You could head to NG 50/50, which is a free access strategy. The past performance has been upwards of 10% on this simple strategy, and on Mi Evergreen, it has been upwards of 20% on this monthly rebalance strategy. Another insight that I want to leave you today with: 1st February 2023 is a very important date globally. Fed will update on the interest rates. There is expectation of 0.25% hike on first night. Let's see where we go there. Before that, in the morning, we will get the union budget announcement. So those budget announcements will cause movements in several stocks. Good movement in some stocks. Havoc in another stocks. We don't know. And of course, the Chinese New Year comes to the celebration, the holiday comes to an end, and work resumes. So there is a huge potential that some announcements will come through. Metals may go through the roof. Something may happen once the Chinese resume work from 1st February onward. So very important date, and very important date for the markets for this coming week or so. This is all I had for today's episode. Thank you so much for your time. Please do share this video with at least one of your friends or family. I'll be hugely obligated if you do that. Please do like this video if you like the content. It gives me motivation and my team, some motivation to continue doing this. And I'll see you in another video. Bye. Thank you.